everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we are continuing to work with the scalping algorithm, which we are developing with the help of the RSI. RSI is a technical tool which we use to determine the strength or the weakness of an underlying instrument along with the Williams-R's functionality is here, and then comes the ATR. So we are using the combination of these three technical indicators and of course the price action as well. Before we get started, this is the disclaimer. I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for many months and maybe even years and allow it to run on the demo accounts to get an idea of the efficiency of the said algorithm. And nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Let's get to the work. I would like to here give you a brief idea of what we are doing. I think one order has been placed here, so I will cancel it. Just a minute. Okay, now we will get a clear idea of what's going on. See, the idea has been that we are looking at the RSI values on the 4-hourly chart, and whenever the RSI is rising, the shift one value is greater than the value a day back that is defined using the shift 6. We are going to go for a buy trade provided the RSI is also above 50 and vice versa for the sell trade. Then we take a look on the hourly setup, and in the hourly chart for a buy trade the RSI value, the Williams R value 3 hours back should have been in a oversold territory for a buy trade and in a overbought territory for a sell trade, and for that we are utilizing these minus 20 and minus 80 bands. A value below minus 80 is to be considered oversold and a value above minus 20 is to be considered overbought, and then we will see whenever there is some fresh buying or the selling pressure, we will be jumping on that opportunity. For that we are also taking a look on the hourly candles, and for that we will need last candle closing should have been higher than its opening and the prior candle should have closed with losses. That is, its closing price was lower than the opening price, so we are taking into account the price action as well. Then we come to the ATR values, and here we look at the hourly ATR and what is the trading range, and utilizing the trading range we see that the entry and the exit, that is the stop loss and the target price levels, are defined using the ATR. And yesterday we were talking about the market open whenever the candle close is greater than this prior candle, provided rest of the conditions are fulfilled. So straight away we can look for the entry closer to this closing value. Otherwise we can also go for a pending open, and there we can simply place the order just little below the closing levels utilizing different criteria, and we can keep the validity maybe for an hour. It should be appropriate, so we can utilize that combination as well if we deem fit. So let's get to the work on the Visual G Forex platform. What we have done so far here is this standard instrument subscription. We are utilizing the Euro USD for our today's purpose, and then comes the position amount. It has been defined at 0. These RSI blocks on the 4-hourly charts with the value shift 1 shift 6 for the comparison purpose. Then comes the Williams R current value, and also we will be looking back 3 hours, and here comes the shift 3. Then we go to the historical candles, their closing levels and the opening levels. and how the price action is unfolding. For our entry exit, as I said, we are utilizing the ATR. Then here we will be defining the stop loss and the target price. So for that we have done this calculation, but we need to do the type conversion, and for that we have left these output values blank for the time being, and then we will do the type conversion from the double to the integer, and then we will fill up that space as well. Then we got these historical candles on the 1 minute time frame, just to look at the value. The moment when the price starts to rise above the last candle closing price, we have well defined the buy side, and today we are going to try to get the sell side done, and also we have to do some further calculations, as we are looking at the possibility of going for a pending open rather than going straight away at the market open, as with pending open we might get a more optimum entry point and even few pips difference with every trade. In the long run it will make a lot of difference, and also our stop loss can be lower and the target price wide. And just to make sure that's the case, we will need to see what will be the optimum entry exit point. Here we have defined these RSI values and then the Williams R conditions as well. Coming to the historical blocks, here we have defined the requirements on the price action as well. Now let's start for our remaining setup. Here I had just connected this open at market, and we had not defined the stop loss and the take profit, which we are going to do today. But as we have looked at the possibility that for getting a more optimum entry and the exit, it will be better if we go for some uh, market rather than going for a market open. If we go for a pending open, it will put us in a better state, so we are looking at that possibility as well. We will increase the zoom size here to make sure that the values are better visible to you. So here I will give you an example. Let's see, let's assume that here all the conditions for the buy trade are fulfilled, and now as you can see the candle close is greater than the prior candle's open, and then as per the market open our opening price will be here. But suppose if we decide to further optimize it, and the closing value is somewhere, let me see, it is 1.085, and then in next hour the low goes to 1.0851, so that's a drop of more than 4 pips from these levels. And now we come to the prevalent ATR value at that point in time, and we get this range of around 13 pips. So 4 pips is roughly 33 or 30% of the ATR, and if we can optimize our entry point, we are of course not depending on this single instance. We can generalize looking at the prior instances as well, and still instead of going for our trade straight away, I feel if we just tweak a little bit and place the order lower by even say the distance of few pips, that extends our stop losses also a bit lower, and also on the upper side we get a buffer. And not to mention the difference in the spread, in the pending order our spread kind of gets reduced, and we are going to gain on that advantage as well. So uh, even we can look at the further instances. Suppose if we are looking at this one, provided the rest of the conditions are fulfilled, or let's see at this point in time, and here we can assume that other conditions are fulfilled, so we are not exactly sure if the trade is going to happen or not. And now the closing level is below the prior candle's opening level, and we can consider that a sell trade is going to happen. If straight away, then the order will be opened after the candle's closing and whenever the value starts to fall below. But suppose if we are going for a pending order, then the order will be placed somewhere on the upper side, and then it will remain valid for 1 hour, and then if the value goes there, it will be filled, or if not, then it won't be filled. So that is the case. So both ways you can do it. If suppose if you want to go for a market open, then straight away this setup is almost complete now, and you can then put in this result of the calculations here, and you will get the entry and the exit point, that is the stop losses and the target prices for the market open. So that's the case. Now let's bring in further calculation expression, as we will need to define the entry point. That's what happened here. Calculation expression. Okay, we got it. And this will be utilized to mark for the entry point for the buy and the sell side. Then we need to do the type conversion as well. So let us define the buy and the sell side entry points. For that, we are looking at the possibility of utilizing the last candle closing level, and then we will be deducting say 30% of the hourly ATR, and then we will keep the ATR value as the stop loss, and then maybe 1.5 or even 2 or even simply 110% of the ATR, as we had done in the yesterday's setup. We can keep that much as our target price, so it should work both ways. Now we will need the last candle's closing price, and then we will be deducting the 30% of the hourly ATR. So let's first define the 30% of the hourly ATR, then we will do the further calculation. And here is the hourly ATR value, line 21. We create a new variable, and for that create a new variable. Okay, we got it, and it is BE P, and it will be 0.30. Okay, so we got it here, and now we do A1 into A2, and we get the result by entry condition. Okay, it will be actually valid for both the entry conditions. So what we do, we simply change the name to make it neutral, and the same result we can utilize for doing the calculation on the same sell side as well. So we get this here. For the time being, we will disconnect the flow and we connect this dot. Now we need to bring in further calculation expression, and here we will define the buy and the sell side entry points. Now we look at hourly candles, and here we look at the shift 1 value, and for that we are going to take the candle 19's closing level. So here it is, candle close, and let us define for the sell side as well. So candle 19's closing level, it is the last candle on the hourly chart. And when we are looking at a buy trade, we will need to subtract the 30% of the hourly ATR to get a better entry point, and then we will need to do the order validity calculation as well, and then we get the EC, and it will be A1 minus A2, and it will be by entry. Okay, so here we have done this calculation, and then for the sale side we will need to add these 30% of the ATR range. So we do A1 plus A2, and we define these as SE. We are yet to start working on the sale side, but we just got these entry points done, and then we will need to do the order validity as well. Now as we are dumping these market open, we will need to bring in the pending order. So here we will need to look at the buy entry point, and it will be a limit order, so it will be buy limit. And also to watch out against the volatility and the volatility, we can further bring in one if condition as well, that last tick price should be above the candle 19 closing level for the buy side, and it should be below the candle 19 closing level for the sell side. So we take the last tick price on tick, and here we get the last tick, and on the last tick for a buy side, I think bid should be good enough. Last tick bid, and then we go to candle 19 closing level, and it should be higher. So we need to connect this. Last tick bid should be higher than the hourly candles closing value, then only the order will be placed by around 30% of the ATR. So we got the default instrument right. We will define the trail amount at any way. You can keep it as you want depending on the equity in your account. Slippage 2 pips should be good enough for the Euro USD. And then we go to the stop loss and the take price levels. We will need to calculate for the order validity time as well, so we do it. Once we are done with this, so here we have got these stop loss and the target levels. As we are working with a scalping algorithm, we are not looking at a big risk to reward ratio. We are simply sticking with a 1 to 1, and after adjusting for spread and commission, we have defined it at 110%. So here I will show you the TP's value, and it is 1.1, means the 110% of the hourly ATR will be considered as a target price. And we now define this as a cell. We save it, we get it here, and we define the TP, target price. Oh, already exists, so we make it TPP, target price pips, and then we do the calculation and we get the value here. We have done the type conversion now, and for Euro USD, to get the conversion done for the pips, as I had explained to you, we need to multiply by 10 to power 4, and here we have 10,000, 1 followed by 4 zeros to fill up the 4 decimal points of the Euro USD. And now we need to define the order validity time as well, and for that we will need to do one more calculation. In 1 hour there are 3.6 million ticks, so if you want to use 1 hour's order validity, you will need to add 3.6 million ticks to the last candle closing time. If you want to keep it for half an hour, you simply multiply it by 1.5. If you want to keep the order validity for 2 hours, you multiply the tick value, that is 3.6 million ticks, by 2. You get the 2 hours and then add it to the last tick time. And here we need to take the last tick time, then we create a new variable, and the new variable will be named as tt, and we put in the value 3.6 million. So count the zeros well and don't make a mistake here, it might interfere with the order validity if we do that. So if you notice I'm wrong, you can just type in the comment. As far as I think, I am pretty much on the mark here, 3.6 million. Okay, we got it. So we bring in that conversion as well. And just to give you an idea, and here we create order validity variable, and I am simply writing 1. It is not required if you are now simply keeping it for 1 hour, but then let's say that I want to keep it for half an hour, then I can make it like 0, sorry, here I can do like this, 0.5, it will be for half an hour. If I do 0.75, it will be for 45 minutes. So that's the reason behind this. So suppose if you want to use different time frame for keeping the order valid, you can do that. You can even write 2. So that's the point behind my explaining all this. So for us, let's, as we are only wanting to keep the order valid for 1 hour, it can be kept at 1. Now we bring in the OV and we do the simple arithmetic. A1 plus A2 into A3 and elastic time plus 3.6 million ticks have been added. Now we need to do the type conversion, and for that we create a variable here, good till tick time. Let's name it as OVT, order validity time. We save it and we get it as the result of the calculation. So far so good. On the buy side, it's looking like we are almost done, and also we are starting to run short on our time. So for the sell side, we will need to work on in tomorrow's session. So let's see how these things fit in somewhere here. Now, as we cut the flow, we need to make sure that this relation is right. So I will need to check what it was. The candle 19's closing level and the candle 29's closing level is to be compared before we go in for the placement of the order, and the candle close was less than the 30 candle close. So we'll take a look on the candle 30 and the candle 29's closing value. And here, these are 1 minute candle. We need the value to be rising, so we will need candle 29's closing value to be greater than the candle 19's closing value, and the candle 30's closing value should be less than the candle 19's closing value. So we go back again, and here we need the candle 19's closing value to be less than the candle 29's closing value. So we kind of connect this, as the candle 29's close should be higher than the candle 19's close, and the candle 30's close should be less than the candle 19's close. That means the candle 19's close should have been higher. So I think I had made a mistake here. If you spot any of these errors, you can remind me, as we will end up with altered results if we overlook such kind of silly mistakes. And now I hope we are right still. Now we got this candle 19's close to be greater than the candle 30's close, and the candle 30 is 2 minutes back. Here is this, and it is 1 minute back, shift 1 and shift 2. So our buy side is done. We can save the file and then come back tomorrow again for working on the sell side. So let's save the file. I would like to thank you all for joining in, and we will be back tomorrow for further development of this algorithm. But if you have liked or say you find anything interesting, you can give me the feedback as well. And of course, the criticism is also accepted. We can work together to develop further efficient algorithms, and it will help us all in making money from the market. So, see you tomorrow, guys. Have an excellent day ahead. Goodbye.